For this video, I wanted to cover an example of when you could have an 1120S filing for an S-Corp, but the S-Corp itself is subject to tax directly on what is their net passive investment income. So generally this will occur if you have an S-Corporation that was previously a C-Corp and it has investment income running through the company that exceeds certain thresholds. So I've got an example 1120S in front of us, and one slide that covers the rules and the example that we're going to be working with. So generally S-Corps are treated as pass-through entities, right? So everyone's familiar with this. The S-Corp files the tax return itself, but no taxes are paid at the S-Corp level, right? Everything is distributed to the shareholders on a K-1. The K-1s are filed with the shareholders 1040 and they pay tax at that level. However, there are certain circumstances where an S-Corp might pay tax directly. So if you have an S-Corp that was previously taxed as a C-Corp before it made the S-election, and the C-Corp has accumulated earnings and profits, the S-Corp might be subject to tax on its passive investment income. So what are the rules? Well, if an S-Corp's gross receipts for a taxable year include passive investment income that exceeds 25% of the total, and the corporation has accumulated E&P from when the entity was previously a C-Corp, then the S-Corp is going to be subject to tax directly on that net passive investment income. Okay, and passive income means gross receipts derived from royalties, rents, dividends, interest, annuities, and capital gains or losses, right, from the sale or exchange of stock or other types of securities. And that includes crypto, okay? Now, what's also important to know that if the corporation continues to have this passive income tax issue for 3 years, then the S-Corp election can terminate. So if you have this issue, not only are you subject to the tax, but you need to do something to remedy the situation so it doesn't keep happening. Otherwise, you're looking at terminating your S-election. So let's look at an example of how this might work. So we have our business here, Fake Consulting Business LLC, created in 2014. And it elected to be taxed as a C-Corp in 2014 by filing 8832. Okay, so the LLC then elected to be taxed as an S-Corp effective Jan 1, 2020. So we got 6 years later, they decide the S-Corp structure is better, so they go ahead and file the 2553 and the IRS approves it. So as of the election date, the corporation had accumulated earnings and profits totaling $516,400. So the 516K, that's the retained earnings in the C-Corp that was not distributed as a dividend to the shareholder. So that's what we're talking about when we're talking about undistributed accumulated earnings and profits. Okay, so now during the 2020 tax year, the LLC generated $123,100 in total gross receipts. Now, within that amount, we had $80K in ordinary income from the trader business being conducted by the S-Corp, and then the S-Corp had $43,100 of investment income. Okay, and there was the breakout. We have interest, dividends, and capital gain distributions. And the investment income comes from another investment via a hedge fund. So the corporation owns an interest in a hedge fund, so it got a K-1 from the hedge fund, and that's how we're reporting all these items. Okay, so that's where our passive income is being generated. It can either be generated like that, or you can own all the investments directly, right? Either way, you're going to have, these are going to be considered passive income when computing this test. So the amount of passive investment income relative to the total gross receipts is 28.59%. So if we take our 43,100, we divide it by the total, that's how we get that figure. So it's over 25%, right? That's the threshold, 25% of gross receipts. Now, because the S-Corp also has these previous accumulated earnings and profits, or E&P, it's going to be subject to this tax, okay? And the tax is going to be assessed on the amount of passive income in excess of the threshold. So 25% of the 123 is 30,775, and the investment income of 43,100 over that amount is 12,325. So the 12,325 is the amount of excess passive investment income that's going to be subject to tax. Okay, so now that we've gone through the fact pattern, let me go to the actual tax return and show you where these elements are. So if we start with page 1 here, this is the company's return, right? We have an S election effective at the start of 2020, but the date the entity was created was Jan 1, 2014. Okay, so trader business income, as you know, is reported on page 1. So we've got our gross receipts from the trader business, all of our expenses here, and there's our net amount of ordinary income or loss, the 13,542. Now down here in taxes and payments, normally you'll see this section blank, right? Normally the company isn't paying any tax, but in this example, we've got that excess net passive investment income tax that's being applied at the S-Corp level. And here it is on line 22A. Now we'll get into how this is calculated and look at the schedule later on in the return. But yeah, this is an example where an S-Corp is filing a return and it's paying tax directly, right? It's not all being passed on to the shareholder. So if we scroll down a little bit, we look at the Schedule K here. So we've got the ordinary income or loss, and then here's our investment income pieces, right? We've got interest, qualified dividend, and then the net short-term capital gain distributions that are coming through from that hedge fund. Okay, so if we look at the balance sheet real quick, you'll note here the retained earnings at the start of the year. This is from when it switched over from C to an S Corp. So the retained earnings isn't always exactly what the company's E&P will be, but in this case, it is the same amount. So we have $516,400 of retained earnings carrying over from when the corporation was a C Corp. So that's the undistributed E&P that creates the issue for this S Corp, right? It's got net passive investment income in excess of 25% of receipts, and it has accumulated undistributed E&P from when it was previously a C Corp. Okay, and so we can see this reconciliation again down in M2. So when you have a S Corp in this situation, the accumulated adjustments account is a roll forward from the S corporation's inception, right? So when the S election was effective, that's why the balance at the beginning of the year here is 0, and the accumulated E&P attributed to when the company was previously a C corp is in column C. Okay, so the K1, straightforward, right? We've all seen those before. Here's where we're computing the tax. Now, it's important to note that there's no form or schedule to compute this tax for the S Corp. In other words, there's no Schedule D, there's no Form 8949 or something like that. That's a prefab form. The computation is simply done by using a worksheet. A lot of tax preparation software will create a worksheet like this one, and so that's what we have to compute the excess net passive income tax. So the worksheet's relatively straightforward, right? We've got our total gross receipts at the top, the amount of passive income we've got, $43,100. 25% of line 1 is that 30,000 figure, and then here's the net passive investment income, 12,325. Okay, so the 12,325 is going to be the amount that's going to be subject to the net passive investment income tax. Now, this is an example of a 2020 tax return. As you know, during 2020, the top corporate tax rate was 21%. So that's why we have line here, line 11 here, the income tax is 21% on line 10. That's how they're getting this figure. If you have an S Corp that's subject to this tax, you're going to use the corporate tax rate that's in effect in that year that you're incurring the tax. And so in 2020, the corporate tax rate for C Corps was 21%. So that's how we're arriving at this $2,588 figure. So once you compute that amount of tax, you jump back up to page 1. Enter that amount on line 22A, and so that is the amount of tax that's going to be owed with this tax return because your S Corp is subject to the net passive investment income tax. Now, just to recap some of the main points here, this applies only if the S Corp was previously a C Corp and has that accumulated undistributed E&P. Okay, for those of you that are thinking, well, I have an S Corp and I've got a lot of passive income, is this a problem? Well, ask yourself, was it previously taxed as a C Corp? If not, then there's no worry. So if you set up an LLC, like for example, if this consulting business was set up as an LLC and then made the S election the very first day it was even created, it was never taxed as a C Corp. It doesn't have any C Corp accumulated E&P. So this net passive investment income tax does not apply to this S Corp. It can generate all the passive income it wants. It's just passed on to the shareholders, and the shareholders pick up the tab and pay the tax. There's nothing being imposed directly at the S Corp level. Okay, so that covers it for this video. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again soon. Thank you.